Hey everyone, so today let's talk about ETFs, which are exchange traded funds. I'm sure you heard of them, but we need to go over some important information before you think about buying into any ETF. So, one thing that's very important that you need to know is that ETFs are not free. Okay, they have fees. The expense ratio over here shows you how much you pay annually in fees. It's a percentage. In this case, for this ETF, it's 0.2%, or 20 basis points. Remember, there are 100 basis points in 1%. In other words, you can think of it as 1/5 of 1% in annual fees. Next, over here, we have the AUM, which is the assets under management. It's a combination of both the capital invested by the investors and the current market value of the investments made by the fund. So, by multiplying the expense ratio and the AUM, you can estimate how much the fund manager of this ETF makes yearly in fees collected from investors. Now, there's no reason to pay someone fees for picking stocks for you. Actually, if you just click on the prospectus, which is the green button in this case, you can see all the stocks in this ETF and all the stocks this ETF is made of, and you can buy the stocks yourself and emulate the ETF without having to pay someone. So if we do a quick little calculation here and multiply the expense ratio by the assets under management, we can see that the company that runs this ETF is collecting $448 million a year in fees. That's close to $500 million a year in fees. So we really need to understand the lost earnings potential from the fees. If we invest $100,000 in an ETF with an expense ratio of 0.2%, we will pay $200 a year in fees. And after 30 years, that would amount to $6,000. But that doesn't include the total lost earnings potential, assuming a 10% yearly interest rate or growth rate. Taking that into account, $200 in yearly fees with a 10% interest would amount to over $30,000 in fees or specific lost potential earnings after 30 years. So instead of investing in an ETF, if you just click on the prospectus, you can see all the stocks that ETF is made up of. Then you can just simply buy and emulate the ETF all by yourself. If it's a good performing ETF, then it's made of good performing stocks, and those good performing stocks are a public record as written in the prospectus, and they're free for anyone to read. So go ahead, check out the prospectus of any good ETF that you're interested in, and simply buy those stocks. You can do it yourself, and then there's no need to pay anyone fees. If you enjoy this short little mini lesson on ETFs, it would mean the world to me if you would check out my book called Stock Market Secrets: Insider's Guide to Successful Investing. It's available on Amazon and is free if you have Kindle Unlimited. Thank you for watching. This is Ben. I hope you have a great day.